Good evening to all of you. Welcome to the session today. The webinar that we have today is on the topic motor insurance claims. Nice to have all of you on board. A few more to join, but I think we will slowly get started. I was just going through the forms. I think a few of you have also attended the motor insurance coverages webinar. If that's the case, it will be useful because today is one step up. Unless if you're clear about what the coverages are, then the motor insurance claims will make more sense. So this is something at the beginning of every webinar we keep letting our participants know. It'll be good to I'm sure all of you know how to take care of it, but because we keep posting these webinars on a monthly basis, they are independent titles. It'll be nice for yourself if you can plan the sequence of webinars for yourself. um, I think there are a few who are complete freshers, if I'm not wrong. I came to know that some of you are just freshers MBA, so looking at getting into insurance jobs. But for the benefit of all, I would like to just mention one thing, that there is a certain sequence of courses that you need to enroll for. So when we say claims, unless we understand the policy aspects of what is covered, what is not covered, we also have a webinar, I think we did that last month, which is motor insurance coverages. So a cascade of webinars is something that will be good for you. But nevertheless, I will try to cover many aspects of coverages also through this. But I'm saying it's very important that you go through underwriting and coverages as a first step to any product, and claims as a second step. I'm sure many of you who are in the insurance industry, whom you know this, but I do see the registrations for this webinar coming from a lot of freshers. So you have to bear this in mind, right? But motor insurance being a very basic product, I'm presuming most of you will know at least what you can expect the policy to cover, right? But there is a technical depth to the underwriting aspects, to the coverages, which are very specific and also driven by legal statutes. There's a definite framework within which the motor insurance is designed, the coverage aspect. So right now, I think I would like to just briefly introduce this course and our company to you in about a minute. So we are IRA Coaching. We are a fast-growing training company which specializes in many insurance topics, apart from also handling many business skills and soft skill topics which are intertwined with the insurance industry. So it is not like an open-ended soft skill course that we offer. We offer that also very much related to the insurance market and environment. So in case any of you is willing to make use of those programs also, you can visit our website and make use of those webinars. So apart from these 2-hour webinars, which is designed mostly for the weekends, it's pretty much easy for employees to enroll yourself. We also do 6-hour courses, detailed courses, in-depth courses, which happen on Wednesday, Thursday, Friday, 6:30 to 8:30. That's a detailed 6-hour course. So we run it across 3 days. It's on working days, but it's at 6:30 to 8:30 in the evening. So like this, we have webinars which are on insurance topics, webinars which are on business skills and soft skill topics, and insurance courses which are much more detailed into the subject, which will also deal with an online assessment, a quiz, handbook which we give, and also a certification. You will get a certificate of completion. And that is only in terms of the 6 hours course. So right now, this is the structure of courses that we offer. And IRA Coaching is a 2-year-old company. We are a group of insurance industry people, which helps in bringing not just the theoretical aspects of each topic, but we try to use our experiences, work experience to give you real-time understanding of the various topics that we cover. My name is Radhika. I'm one of the lead faculty and I'm also the director in this company. And I have served more than 30 years in the insurance industry in all kinds of functions, including underwriting, claims, marketing, business development, relationship management, IT, back-end operations, all kinds. I don't know, and I'm still learning, right? So that's the beauty of the insurance industry. So right now, I think we will jump into this topic. I just give you an overview of what we want to cover in the next 2 hours or so. We will be dealing with motor insurance claims. When we say claims, obviously the claims is the cornerstone for any insurance company, right? For any insurance professional also. Even if you are on the marketing side, for all of you who are looking for a job fresh in the insurance industry, it helps if you know, if you have a detailed know-how about the claims. And of course, the technical people who are in the claims department or even the underwriting department. See, claims is the area where you really touch a customer deep, right? That's where you're going to build your brand with the end customer. So you may sell a policy, you may give a very, fantastic coverage and premium, but the true essence of service, customer service, is felt only at the time of a claim. So even though you are in the underwriting or the business development department, if you are able to educate your clients, your intermediaries or agents as to the claims process, at least an overview, then you really stand up to them in their eyes as an insurance professional. This is what the insurance agents do. Very differently they do. Of course, the brokers do, but I would say the insurance agents for all their life, whenever there's a claim, they give their life to that claim, right? They make it happen. They ensure that the claim is settled on time. They help in the documentation. They sit with the surveyor to help the negotiation happen for the claim amount. Everything end to end they take up when it comes to claim, and that is why I would say that in spite of so many intermediaries and advancements, an agent always generally retains his clients because of his bonding with his clients at time of claim. So I will just jump into a presentation right now, which will guide us to uh, navigate this session. Please use the chat box. I think you have three options on your mobile or laptop. It's best you access these programs on laptop. It'll be easy for you to take notes and also perhaps to take pictures of the slides if it's on a laptop. I hope the presentation is clear. Please make extensive use of your chat box to put your questions out. I will try to address the questions even through the webinar. So let's get started with motor insurance claims. Now, when we say claims, of course, that every insurance office has claims officers, claims personnel, claims manager, right? What is the role of a claims manager? Or there are certain terminologies that we want to get familiar. We may know, but still, I thought we should start with this definitions, right? What is a claim? A claim is a demand made by a person from the person who gave him the policy to recover for a loss that may be covered by the policy. Simple. It is just a demand for compensation. In the case of motor, it can be for a known damage claim, which is damage to the vehicle, or it can also be a third party claim, which of course the end party, the affected party goes to the court and files a legal case against the vehicle owner and the insurance company together. That is a third party liability. But essentially, claim is nothing but a demand for compensation, right? A claimant is a person who's making the claim. This is very easy. Now, every insurance contract, especially if you talk about a motor insurance contract, it involves three parties. Insured insurer is there for any product, but the beauty of motor insurance, it also has a third party. That's what we mean by third party liability. Why third party? Because of the use of your motor vehicle, you can be injuring, or there could be a fatal accident because of the use of your vehicle to a third party who is nowhere related to the first and the second party, right? So very essentially, you must understand first party, second party, and third party in the case of motor insurance. So who's the third party? Just now we saw a person who is not part of the insurance contract. He has not signed the proposal form. He is not mentioned anywhere on the insurance policy, but still he can make a claim. He is a beneficiary of a road accident that involves the insured vehicle. So he's a third party. Now, an adjuster, which means a surveyor or an adjuster, what does he do? What is the definition of an adjuster? He is a person who is responsible for verifying the cover and determine the cause of loss, the amount of loss, and also for the entire documentation and settlement of the claim. So one of the main things that he starts verifying, there are various elements we'll look at step by step. The first thing that anybody will see is whether the date of accident is within the period of insurance. And from then on, he gives an initial estimate for a claim, and he stays in touch with the client and the insurance company to ensure that the entire documentation, the cause of loss is established, the types of damages that have occurred are all identified, what are the damages that need repairs, that means just labor charge, what are the damages that need replacement of parts. Like this, he goes about the assessment of the loss, and there are very many documents that are required for settlement of a claim, which is also the primary responsibility of the surveyor. We'll look at all those in the upcoming slides. If I'm going too fast, you have to tell me. Now, apart from the own damage, there are also a few legal aspects that are involved to a motor insurance contract. Like I already said, with respect to a claim, there are a few legal aspects, right? Not just third party liability, even for an own damage claim, the loss should mainly occur within the scope of the policy, like I said, within the period of insurance. Then comes the proximate cause. So if you see the scope of cover for a known damage claim, when you have a claim in which the vehicle owned by the insured is damaged, then there are a list of perils. So motor insurance is a named peril policy. It is not an all risk policy. It is a named peril policy. There are a set of 9 perils which are covered, because of which if there is an accident, any damage to the vehicle, then that becomes the proximate cause, and then you settle a claim. So some of the examples of what is covered, that's why I said you should have done the motor insurance coverages for the benefit of some of you. So we always think motor own damage claim means accident. Okay, some vehicle go which and hit some vehicle, so claim. That is the most common. Definitely accidental external means is one proximate cause that is covered under the policy. But there are many other perils also that are covered under the policy. If you, some of you I know, like I think Rajesh is there, some of you are there who have attended a previous webinar. So you would recall, that we also cover fire. If the vehicle catches fire, that is also own damage. If there is a lightning and if there is an explosion, all these also resulting in physical damage to the vehicle is covered, right? And simply riot, strike, it is not that just by going and hitting another vehicle it is covered. A whole set of perils are covered, right? Malicious damage, somebody simply throwing a stone on your vehicle, or somebody like people who are playing on the street can just draw some nice take a piece of stone and draw some nice design on your car which needs painting and denting, that's also covered. Like this, there are a set of perils which are inbuilt and covered under the policy, right? So also negligence. So one thing is, it's a big dispute when, obviously in every policy, one of the main exclusions will be willful negligence is an exclusion. It is not the job of an insurance company to pay a claim whenever the insured is irresponsibly causing an accident to his own vehicle. But in the case of motor, one thing is it's very difficult to prove negligence, right? But sometimes in an FIR, whenever a motor accident happens in the road, the first information report that is issued by the police department generally mentions which driver or who has really been negligent in driving the vehicle which resulted in the accident, right? If that is there, then maybe we have to see who was negligent. See, if there is gross negligence, somebody who didn't take enough care and caused an accident, the insurance company can definitely deny a claim. But if it's not mentioned in an FIR, it's a very simple, small claim. Quite possible. It's very difficult to prove whether, the driver of our own insured vehicle was negligent or not. Right? So, generally, negligence, if you ask me, is covered under a motor own damage claim. But again, the legal aspect to this is called burden of proof or onus of proof. Very important terminology in motor claims. Burden of proof means what? It is a legal requirement, not just for motor, for any legal contract. Let's say, even for a situation which does not deal with insurance, somebody is putting a case on some third party for some compensation. Always remember this, the burden of proof, which means the onus, the responsibility to prove that I deserve to be compensated, always lies with the claimant. This is the legal requirement. This is the law of the land. Like, when you have a purchase, consumer purchase, it is buyer beware, right? There's always something called caveat emptor, buyer beware. That means what? If it is a sale, it is up to the buyer to see whether he is choosing the right product when he is buying a property. This is the law of the land when it comes to commercial purchases. Like that, the legal aspect for insurance in terms of proving, burden to prove, onus of proof, always lies with the claimant. If I am the insured, I am the claimant, I have to prove to the insurance company that I deserve to be compensated for this claim. Right? That is why you have something called a claim form. That is why you have something that a claim bill has to be submitted by the insured. It is always the start point is claim from the insured, isn't it? He has to prove that as per the policy, I am liable to be compensated. So this is something I want you to remember, which is called burden of proof or onus of proof. And then there's some more legal aspects to a motor insurance claim, which is as an insured, they have to comply with a certain set of policy conditions. So these policy conditions are again, grouped into three categories: conditions precedent to taking the policy, conditions subsequent to taking the policy, conditions precedent to liability itself. So what does these three mean? So precedent to taking the policy, what would be the legal aspects? What would be the conditions? That means in the proposal form. Before taking the policy means he is giving the material facts, utmost good faith. He has to give all the key information about the vehicle, the risk, the age of the vehicle, or let's say the claims history, or the make, model, any other aspect, existing damages that the vehicle already has. All these material facts he has to inform to the insurance company. This is a condition precedent, which is nothing but the principle of utmost good faith. If there is any lapse in this condition, precedent to liability, precedent to taking insurance, the claim can be denied by the insurance company. Similarly, conditions subsequent to taking insurance. That means what? Any change in the risk, any material fact that has changed after the policy has been taken, that also the insured has to inform to the insurance company. Some examples can be Maybe they have a motor vehicle. When they purchased, when they took the policy, it was petrol engine. But many people, because they want to have fuel efficiency, they convert the engine into diesel engine during the policy period. Then they have to inform. There is always an additional premium also sometimes that is payable. They have to inform the insurance company. So this is condition subsequent to taking the policy. Name transfer, or let's say hypothecation has been included, hypothecation has been cancelled or closed in the RC book, right? Mainly name transfer, or let's say, the vehicle has been shifted from, let's say, from Tamil Nadu to Kerala. There is a re-registration that has happened. These are all conditions subsequent to taking the policy. Quite possible it happens during the policy. Every material change has to be informed to the insurance company, and a proper endorsement should be issued so that the claim does not get stuck for any reason. Then comes condition precedent to liability. That means whenever there is a claim that happens, there are a few conditions before the liability is established. What are they? First thing is, once an accident happens, it is the duty of the client to inform the insurer immediately. See, in motor, one of the important pain points for insurance companies is accumulated damage. People don't inform once there is an accident or minor scratches. Now, what happens? They will just wait whenever they have time, because every day they have to take the vehicle to the office. They don't bother to inform. They don't put the vehicle and get it repaired. But they will accumulate damages, 3, 4, 5 accidents, and then ek saath denge. This is condition precedent to liability. The insurance company can simply deny the claim. Why? Because when you say accumulated damages, once the surveyor sees and takes photos of the damaged parts, he can very easily make out, because of the rust or the dust or the depth of the damage that has occurred, whether it is a fresh damage or old damage. See, old damage means more cost, right? If there is more rust, then the painting charge is going to be 3 times, 4 times higher. Why should the insurance company pay a higher claim? If there is a claim, you have to immediately intimate. That is a condition precedent to liability. Similarly, another condition precedent, very important condition, is that the driver has a valid driving license. We will look at all the documents also in some time, but I'm just trying to give you examples of conditions that are precedent to the insurance company becoming liable to pay compensation. That's what I'm coming. Complaints of warranties is also a very important legal aspect when it comes to motor insurance claim. Example, let us say, there is a commercial vehicle policy that has been issued to a tractor, agricultural tractor. Now, there could be a warranty that no trailers should be used. You know what a trailer is? See, a tractor is something that plows the agricultural field. But most often what people do, they will attach a trailer to collect the crops and put it along with the tractor, which pulls the trailer. Once you have a trailer and you bring it on the public road, it is additional risk. So what generally insurance companies will do, they will issue a warranty. That means special condition. Whenever agricultural tractor is issued, always there will be standard warranty which says no trailers should be attached. But at the time of claim, if there is a trailer, if it is established, if they come to know, then the damage to the tractor can also be denied, right? Like this, there are special conditions that are attached to the policy, which also needs to be complied by the insured to get a claim settlement. Observance of utmost good faith is very, 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 very important, like we already saw. And determination of amount payable also, there's a legal aspect, which is why we call it a principle of indemnity. Right? How much claim to be paid? It will be paid to meet the principle of indemnity. What is principle of indemnity? So that the insured is placed in the same financial position that he enjoyed just before the loss happened. So I wanted to get a gist of what are the legal complications around a motor insurance claim before going into the actual claim process. These contents are very important. in terms of a holistic understanding of the subject. Now, if you are able to take notes and take pictures of some of these slides, and in case any one of you is willing to go for your certification programs, be it your licentiate exam or your motor associateship paper, this training will help you, and it might cover almost 40 to 50% of what you will see in your book. So that way also it will be very, very useful. And of course, it gives you an overall understanding of the subject. Now, just now we saw how indemnity has to be established. Now, when you say indemnity, like we already saw, the insured should not make a profit out of the loss. That is what indemnity says, right? So, how do you ensure that indemnity is established in the case of motor insurance claim? We'll look at it. So, extent of insurable interest. So, one thing is there is, like I said, there could be a situation of hypothecation. Whenever somebody is buying a vehicle, he generally buys with a loan, right? And let's say Bank of Baroda is giving a loan for 70% of the value of the vehicle. Now, in the RC book, clearly it will be written hypothecated to Bank of Baroda, right? You must have seen every RC book will also have the hypothecation aspect included. So once, let's say after 3-4 years, if the client is paying up the loan and it is getting over, then he has to go to the RTA and also request for cancellation of the hypothecation in the RC book. So let's say there is a loan. Now, if there is a total loss, fire accident, the entire vehicle has been damaged. Now, who has insurable interest to what extent? 70% we have established in the RC book that it is, let's say, not Bank of Baroda, HDFC Bank, let us say. And the policy is issued by HDFC Ergo. Now, HDFC Ergo will have to decide 70% of the insurable interest lies with the bank. So, they will settle the claim in such a way that in the proportion of who owns how much. Now, this is when a total loss happens. But for the smaller losses, let's say 10,000 claim, then the insurance company won't mind. See, the loan must be somewhere in lakhs. So for a 10,000 claim, we don't bother going to the bank. But if it's a large claim, let's say 3 lakhs or 2 lakhs, a big claim, then the claim settlement will be made to the bank and not to the owner. That's why insurable interest. But if they give an NOC, if the insured is able to get a no objection certificate from the banker, then we can pay to the client. Similarly, deductibles. We all know that there are excess that is applicable in the motor insurance policy. Now we know that the excess, the compulsory excess is based on the type of vehicle, right? It can, if a commercial vehicle, it is something like I think 2,500. If it is private car, it can be something around 750 or 1,000. Again, it's based on the cubic capacity, the use of vehicle, the nature of vehicle, right? For two-wheeler, it is even less. So based on the cubic capacity and the categorization of vehicle, there are excess that is mentioned in the policy, which has to be deducted during the claim. Depreciation, we know there are slabs like fiber parts, 30% depreciation, and you have plastic parts, which are again 50%, and your metal parts based on the age of the vehicle. So if you have, let's say, a hardcore, metal item, and let's say the vehicle is 3 years old, then generally the surveyor will apply 10% depreciation for each year. Why depreciation? Because the vehicle is being used, there is a certain wear and tear, and we don't want to compensate the client with new parts. Although he will replace new parts, but we want to make a certain deduction from the claim because we have to put him in the same financial position that he was before the loss. That is the principle of indemnity. He can't get a new part for an old part, right? I'm talking conditions. I'm talking the concept. Of course, there is something called zero debt policy, which is very famous in motor, where they can pay additional premium. they can take that add-on cover, and whatever amount is deducted as depreciation in the primary claim will get paid under that add-on extension. That is also there. But as a concept, to meet the principle of indemnity, insurable interest, deductibles, depreciation, condition of average, salvage. Condition of average is nothing but underinsurance. If there is heavy underinsurance, like IDV was supposed to be, let us say, 40% of the new price, but they fixed it at let's say 30% of the new price for a very old vehicle, then there is underinsurance, right? The IDV under the policy will always be compared and checked whether it is sufficient enough for that vehicle or not. In case there is an underinsurance, then that also will be penalized from the claim amount. Salvage is nothing but anywhere where you have either partial loss or total loss, where the parts have to be replaced. So once you replace the parts, those nuts, those bolts, those metal items or fiber items, they can be reused in the market, and there are licensed salvage buyers in the market who will be waiting to take stock of these salvage from the authorized garages. So whatever little amount the surveyor feels that that particular material will fetch from the salvage market, that will also be deducted from the claim amount. So it is not applicable for repair claims. Salvage does not apply for repair claims, because in a repair you will only have labor charges. But in a replacement claim, where the parts are completely damaged and you have to replace it with new parts, some amount, 150, 200, 500, based on the weight of the iron part that is damaged, or some what value it fetches in the market, some negotiation will be done between the surveyor and the workshop, and that will be deducted from the claim amount. Subrogation and contribution are very important principles based on which indemnity works. Subrogation means it's always applicable only in the case of theft claims in motor. Let us say there is a theft claim. That means the vehicle got lost. Now, the insured is intimating the claim. Now, what happens once there is a theft claim, the police is involved. One of the important documents will be first information report. So the insured submits his claim form, the first information report, and he waits. Now the police is doing all efforts to see how to recover the vehicle. They do their job, and after 90 days, they also give up. They say, let's say they didn't get the vehicle, they could not trace the thief, or they could not trace the vehicle. They will issue a certificate called non-traceable certificate. This non-traceable certificate, NTC, or it is also called final investigation certificate. FIR is first information report. The NTC is the final investigation report. So they will say that we have tried our best, but we could not trace the vehicle. So they will police will issue a report. But they generally take minimum 60 to 90 days, because they need to put all efforts to see how to recover. If they still don't recover, they will issue. But the insurance company always waits till this report is issued, and a copy of that is taken, and then the theft claim is paid. How is the theft claim paid? It is IDV minus policy excess. It's like a total loss. Totally the vehicle is lost. So you give the IDV. Whatever was IDV under the policy, IDV is nothing but insured declared value, the value for which the vehicle was insured, less policy excess. Like we already saw, deductible or excess is that amount which is again mentioned in the policy, which needs to be deducted from every claim. So once there is a theft claim and a claim has been settled based on FIR and the non-traceable certificate issued by the police, there is something called a letter of subrogation that the insurance company will ask from the insured. So what is this letter of subrogation? So today the vehicle is lost, 90 days, 60 days, whatever the period, the police could not trace the vehicle. But sometime later, let's say after 1 year, 2 years, somewhere during some other investigation, let's say the police traces the vehicle. Now, if they trace the vehicle, as per record, the vehicle will be owned by the insured only. So they have to call the insured and hand over the vehicle to them. Now what happens? Double compensation, isn't it? So he has anyway got full IDV and he will also get back the vehicle. That is not allowed if you want to meet the principle of indemnity. He will be overcompensated. So whenever there is a theft claim, the letter of subrogation is taken, where it is nothing but a letter which the insured will sign and give to the insurance company, saying if the vehicle is traced at a later date, then the registered owner of the vehicle will be the insurance company. The police has to hand over the vehicle to the insurance company and not to the insured. That is the requirement of letter of subrogation. Why this is done? To meet the principle of indemnity, which says that the client should not be making more than what he has suffered as loss. Then comes contribution. We know the principle of contribution, which is nothing but the same vehicle being covered by multiple policies, right? So if let's say HDFC also issued a policy to the same Innova, and let's say ICICI Lombard also has issued, or even United India has three insurance companies, one claim. It's not possible for the insured to get three claims, isn't it? So again, that will defeat the purpose of indemnity. So in the case of contribution, the surveyor will always, it is an important task for the surveyor to check whether there are more than one policy covering the same vehicle. If there are more than one policy, then every insurance company will settle on a certain proportion only. They won't settle 100%. So that the total becomes 100% for the client. The client should not make a profit out of the entire claim settlement. So having seen some legal aspects and a few indemnity aspects, now we will see what are the verifications, what is the evidence that is needed to process a claims under a motor insurance policy. Like I said, there should be a valid policy document. Valid means what? Period should be valid. On the date of accident, the period of insurance should be valid. Then the payment of premium. So one thing is, see, typically the situation comes when you have a third party who's issuing your policy on behalf of the insurance company. Today we know that lot of people have online tools like the dealers or sub dealers or agents or the POSP, point of sale person, or brokers. All these people, they have the software of the insurance company to issue the policy. But how is the premium remittance happening? Have they kept enough cash deposit with the insurance company so that the premium has been totally paid to the insurance company? This is a very important verification and evidence that is needed to settle a motor insurance claim. Of course, one verification will be to the cause of loss. Now, most of the times it's not a straight case. Sometimes if it's a motor accident, yes, it may be very clear that somehow they hit another lorry or a pavement they hit, or they went and hit a compound wall, or some other vehicle came and hit this vehicle. Like this, the cause of loss in a road accident, the brief description will have to be given. Narration has to be given in the claim form. But there could be some weird causes like, let's say frost damage or theft of accessories. Somebody stole the tape recorder. Now, these are all, the cause of loss has to be established, right? So it's even, when you have a situation of windscreen, we need to see, especially high-end cars and all. We don't know, there could be a fraudulent claim, isn't it? Somebody just a high-end car, they just want to go for something new. Can also be self done damage. So the cause of loss is a very important verification that insurance company and the surveyor will have to find out. Then, of course, the quantum of loss, which we saw in the previous slide, how indemnity is ensured. And then now we'll slowly, briefly see the process, right? Now, the preliminary process whenever a motor insurance claim happens is there has to be an immediate notification. Like I already said, they should not delay and accumulate losses. It is a policy condition precedent to liability, that every claim has to be informed to the insurance company within reasonable time, immediately, right? That's a very important thing. And once the immediate intimation is given, there is a certain investigation that has to be done. So investigation is done in the form of either spot survey or a full-fledged survey. So whenever there's a major accident that has happened at a far-fetched location, which is, let's say, outside outskirts of the city, and maybe, very, very major accident. It should be major accident and it should be a remote spot. Then the investigation or the survey will be a spot survey, right? Because by the time you shift the vehicle from there to the garage, there could be some more damages that can happen. So a spot survey will ensure and fix what are the losses that happened because of that accident, right? And there could be third party involvement, like some third party may be injured, or maybe some third party has resulted in a fatal accident where the person who met with the accident with the injured vehicle died. All these will lead to a situation where there will be a spot surveyor or an investigator who will be appointed to check the immediate aspects of the claim. Then suggest minimization. So one thing is minimization is a very important thing. So towing the vehicle immediately to the nearest garage for some small repairs. So if you drag a vehicle with certain major damages that have happened, it can aggravate the damage. So it's important whenever there is a major accident that the spot surveyor or the investigator, they will also suggest some minimization. Let's say they have to be towed to a nearest garage to fix a few things, and then they will eventually be shifted to the final garage. Like this, minimization is a very important aspect. So all these are duties of the insured also. They also have to engage in ensuring that the loss does not get aggravated. And another important process is to report to police. Like I said, whenever it's a major accident, right? That's a major, there's no limit as such, but I would say anything more than, let's say, 50,000 or 1 lakh claim for any vehicle. I'm talking about the bigger vehicles, not two-wheeler. Two-wheeler, of course, if it's a theft, definitely police. But if it's a total loss of a two-wheeler, definitely police. And in the case of four-wheelers or the major equipments, if the loss is anywhere above 1 lakh, it is always reasonable to inform to the police and take an FIR. And another situation where the police has to be informed is whenever there's a third party involvement. If there is a third party property damage or injury or death involved, definitely an FIR should be there that has to be submitted by the insured. A fire brigade wherever there is a fire claim that happens. So another few preliminary checks is whether the subject matter is duly covered. Most of the times the vehicle number has to match, the make and model as per the policy has to match with the real vehicle particulars. Name transfer, very important, who's the owner as per the RC, as per the policy, whether it is matching or not. All these things, subject matter has to be verified. Then the peril, like I said, whether it is a road accident or whether it is a rain or fire or frost damage or an impact or malicious damage, the cause, the peril has to be clearly established and checked. And of course, the period of insurance. Notice in time. Now, once we have seen the initial preliminary process of intimation and checking and evidences, the survey. Now, we already saw spot survey, but right now, what is the basis of allotting a survey? So, the size of the loss is the main criteria for appointing a surveyor. Can be a trivial claim, which is just few thousands, can be medium size, it can be total loss or a large claim. And another important category is a complex claim, where you may have involvement of head-on collision with another vehicle, contributory negligence, where both the vehicles were negligent in causing the accident. Right? So complex, what I mean is, the accident itself involves many parties. So then also according to that, the surveyor will get involved. So based on the initial intimation of the claim, it is first categorized into which type of claim. Accordingly, the surveyor can be either the official of the company, we call them in-house surveyors. It can be an independent surveyor also, and can be a skilled surveyor also. So these three categories of surveyors are available in the market today. Many private companies are making use of the services of their officials to avoid high survey fee cost. They train their own employees and they have an in-house team. One thing they want to achieve through the in-house team is very responsive settlement. Once it is an in-house employee, whichever time of the day he will go and do the survey, and even weekend or during the day, and there is a very quick action, right? And they want to build customer satisfaction by building this kind of brand. Many companies have in-house team. Independent surveyors are also appointed when you need those categorized surveyors. See, most of the in-house surveyors, they may be, allowed to, or they may technically, they are only qualified to take up claims up to 1 lakh or 2 lakhs or whatever. But let's say you have a large claim, let's say, a total loss claim or a constructive total loss claim. We look at what these are. When you have total loss claim, then it's better to go for independent surveyor, where you will have a lot of negotiations with the client. So a third party surveyor will help. Okay? And within third party surveyor also, I don't know how many of you are aware, there's something called categorization of surveys. So there is a grade surveyor, B grade surveyor, C grade surveyor. Within independent surveyors also, they have limits of laws up to which they can do survey, because they are licensed by IRDA, right? And they are trained, and the experience that they have, based on that, they are also categorized. Like C grade surveyor is allowed to do survey up to 2 lakhs. B grade, let's say, is up to 7.5 lakhs. A grade can do any number of any size of claim. I'm not sure of the limits, but I'm just giving you an example of how the surveyors are licensed and categorized. Then the third set is skilled surveyor. What do you mean by skilled surveyor? You need sometimes, there are these miscellaneous type of equipments which also meet with the motor insurance claim. It can be a drilling rig, it can be a commercial tractor, or it can be an excavator, right? Or it can be those heavy equipments, construction equipments, which are also, once it is registered by RTA, they have to be covered under a motor insurance policy, right? So as long as it's a mission number, it's fine. But if it is registered, it has a certain necessity to come onto the public road, then they have to go for a motor policy. So now these equipments, they have certain functionality. They work in a certain way. In that case, you need skilled surveyors, engineers perhaps, who know how these equipments work and what could have been, what could have gone wrong, what would be the exact cause of loss, how to quantify the damages, how to ensure which parts need to be replaced. So it needs skilled knowledge, right? So the blade could have twisted, or the engine needs replacement, or let's say, some of the part needs to be tweaked. So all these intricacies and technical aspects only skilled surveyors will know. Mostly, you generally it is automobile engineers, but when you talk about construction equipments, they can also be mechanical engineers who are generally involved in the process of survey. So right now, having seen survey aspect, we will look at some of the types of settlements. We will go into each one in detail in some time, but I want you to get the names first very clearly. Okay? So this should register in your mind. Now, there are rather four sets of claims that we talk about when we talk about claim settlement in motor insurance. One thing is standard claims, which when we say standard claims, what does that mean? They are payable as per the terms and conditions of the policy. Straight cases, right? Totally payable, no issues, no complications. Now, under the standard, you can have a total loss claim, which means what? Completely gutted down, completely damaged. Let's say the vehicle went on the highway with high speed, ran off the road because of a certain tire bursting or whatever be the reason, or hit against a tree and it toppled and completely got crushed and damaged, or it's a fire accident, or it's a lightning that caused fire. Anything that resulted in total loss or damage means the vehicle cannot be reused again, nor can it be repaired. That is total loss. So actual total loss, ATL or TL. So this is one type of standard claim. The second thing is constructive total loss. Very, very common in motor. I would say CTL claims are the largest claims that happen in an insurance company. So what is CTL? Where the loss or damage to the vehicle is such that it is, if you were to repair it, it would cost more than the IDV. One thing is, it is not economical to repair it because the cost of repairs is more than the IDV itself. Another thing is, the cost of the repairs is 75% more than the IDV. 75% of the IDV, right? So in both these cases, when it is uneconomical, when it is more than 100% of IDV, or even 75% of IDV, the cost of repairs, then both the insured and the insurer will sit together and try to construct the partial loss also into a total loss. It is beneficial for both to go for total loss settlement, isn't it? Even for the insurance company, instead of paying a claim which is so uneconomical. See, one thing when you say when you have to pay a claim which is going to take, let's say, 10 months or 12 months, 1 year to repair itself, so much, so many damage. Sometimes, it's quite amazing that the type of damage that happens, if you look at the estimate of repairs, it will run to pages. Your head will start swirling. So when you have such uneconomical repair claims, or the value, the total amount of repairs is much higher than your IDV, or even it's more than 75% of IDV also, both the insured and the insurance company will prefer to settle the claim on a constructive total loss basis. Any questions so far? You can keep put it in the chat box, like I told you. Then comes the partial loss. See, partial loss, the word itself says very clearly, it's not a total loss, but some parts have been damaged. It can be, the fender, or the mud guard, or the bonnet. When should we go for total loss, Mahesh? So it's not about when should we go for total loss. See, a clear-cut total loss is anywhere there, but a constructive total loss, like I told you, three situations. One is the repairs are very uneconomical. It is not possible to even, do those repairs. Very tedious process. One. Second is, let us say the IDV of the vehicle is 5 lakhs, and the repair estimate to repair and put it to the working condition is 6.5 lakhs. So what is the point in repairing it? The insurance company also prefers to pay it on total loss. Insured also doesn't want a vehicle in which every part is replaced. They also feel sentimentally to go for total loss and buy a new vehicle, isn't it? So uneconomical, and I wouldn't say uneconomical, rather I would say it is a tedious process to repair, lengthy process of repair, and the repair cost is more than the IDV. The repair cost is more than 75% of the IDV also. See, one thing we must remember, what is the benefit of settling on total loss from insured point of view? The moment there is a claim, let's say you're the owner of the vehicle, major accident has happened. First thing is you will be scared. Sentimentally, you'll be off. You're constantly, trying to ask the insurance company to pay full claim because sentimentally you don't want to use that vehicle. I'm coming from that aspect. Now the insurance company also, they will look at a total loss when they feel that repairs are not going to happen easily. It's going to take months and months and months. Some parts are not available. It is not feasible to repair. If the damage is so severe, or the repair estimate is more than the IDV or even more than 75% of the IDV, it is okay. Even then, customarily, practical purpose, insurance company will agree to go for total loss. Clearly, these 3 points. This is clear, Mahesh Vijipuram. Do you want some more explanation on this? Repairs are not possible. Repairs are more than the IDV cost. Repairs are more than 75% of the IDV. All three situations, constructive total loss will happen. I will come to one more non-standard also in some time. Now, partial loss is very easy, isn't it? So anything less than 75% of IDV, whatever has happened because of a claim, all those will be partial loss claims. That means some parts need replacement, some parts need repairs, right? It's a partial loss claim. It can either be a repair claim or a replacement claim. Right? So that is standard claim. So one thing I want you to understand, when it comes to standard claim, the claim is technically payable, but just the mode of settlement is different. The claim is technically payable because peril is covered, the policy is valid, all the conditions precedent to liability are met, liability is established. Those are standard claims. Completely technically payable claims. It can be total loss, constructive total loss, or partial loss. I want you to understand this. Now, let me bring another concept of net of salvage settlement. Now, this you won't find in the book, but nevertheless, I want to explain this concept to you, just to because Mahesh raised a valid question. Now, another way of settling, pulling a claim, we say pulling a claim from partial to total loss. Actually, partial, it is not like the first instance where the vehicle is completely damaged. No, there is 60 to 70 to 80% damage. 60% will definitely be partial loss. 70% also will be partial loss. 80%, like I said, above 75% of the IDV, it will go into total loss. Right? 100% definitely total loss. But right now, there can be a situation where the repair cost is 60% only. In that case, like I gave the example of 60% or even 50%, minimum 50%, let us keep it. This you won't find in the book, salvage loss settlement, we say. Nowadays, in the recent new books, it is coming. But this became a very recent and very effective practice, which was more so brought in by the private companies, I would say. So whenever there is a claim of, let's say, 50-60% repair estimate of the IDV, what I mean by these percentages, I want you to understand. Let's say the IDV is 5 lakhs and the repair estimate. First thing, the moment you go and put the vehicle, damaged vehicle in the garage, the authorized workshop will give you repair estimate. That becomes the basic document to decide whether it is partial loss or total loss. Right? So once he gives a repair estimate, if the repair estimate, if the IDV is 5 lakhs, if the repair estimate is 4 lakhs and above, total loss, like I already told you, it will be constructive total loss. That is clear, right? Whether it is 4 lakhs or 4.5 lakhs or 5 lakhs or even 6 lakhs. Sometimes the repair estimate is more than IDV also. Anything above 4 lakhs will be total loss. But let's say the repair estimate is around 3 lakhs. So 3 lakhs is how much? 60%. If 5 lakhs is IDV, 3 lakhs is 60%, isn't it? So let us say it is 3 lakhs only, but the insurance company may still weigh and see. This is where the sentimental aspect will also come. Here's where the insured also is waiting. Oh no, I would rather wish if the insurance company settles it on total loss basis. Now the insurance company will choose. They may go for total loss even in the case of 3 lakhs repair estimate. Whenever there is a solid salvage value that is expected. What do you mean by salvage value? The vehicle is lying in the garage. You don't want to repair it, though it is 3 lakhs repair estimate, you don't want to repair it, and you want to go for salvage loss settlement. You will do that when you know that if you dispose that vehicle to a salvage buyer, you may get that 2 lakhs. Then you don't want to penalize the client to repair and use the same vehicle. So what in that case will happen? Net of salvage. So let's say repair estimate is 3 lakhs. 3 lakhs will be paid by the insurance company. And the 2 lakhs, whatever is expected as salvage value, it will be opened up to salvage buyers by the insurance company. Insurance company will be involved in that process because they also need to ensure indemnity. So salvage buyers, 3 minimum quotations will be taken. Whoever gives the highest bid for the salvage without repairs, they will ask the salvage, you take this vehicle, how much will you give? If he says 2 lakhs, then the insurance company has to pay only 3 lakhs. The 2 lakhs will be paid by the salvage buyer directly to the client. So the client gets his IDV and no need to repair. So client is happy because sentimentally he can go for a new vehicle. Insurance company also happy not to bother about those parts and replacements and calculations and settlement. Immediately across the table, they will pay 3 lakhs and come out. Right? So this is also a type of total loss, but it is not considered total loss. It is less than 75%, but it is net of salvage. So net of salvage is where if the anything above, let's say 50% or is a repair estimate, but the salvage fetches very good value in the market, then the insurance company will again agree to go for a salvage loss settlement. Is this clear at this point? I want you all to tell me if it is clear. I can go over it because in the further slides will be repetition of what I'm saying, but I want you to get the point. Okay, Shobana. Any other responses? Is it clear? In chat and let me know if it's clear. You let me know it's clear. Yes, Sanjeev Garu. See, the insurance company will have to be involved in the net of salvage also, Sanjeev Garu. I know from where you're coming, but all I'm trying to tell is why the insurance company has to be involved in the net of salvage. Because whatever the salvage buyer is paying, only the balance the insurance company will pay. Let us say in the same example that I told, the salvage is so good that though the repair estimate is 3 lakhs, but salvage is willing to give 2.5 lakhs. For an example, I'm saying, if the salvage buyer is willing to give 2.5 lakhs for the vehicle which is damaged, he will buy it, and what he does with it is his headache. He will change the RC in his name. He will again repair and sell it in the second-hand market. We don't know what he will do. But right now, if the salvage is willing to give 2.5 lakhs, and if the repair cost is 3 lakhs, what will the insurance company choose? Will they pay 3 lakhs or will they pay the remaining 2.5 lakhs, which is in the example, it is 5 lakhs is IDB. They just have to pay 2.5 lakhs because salvage buyer is anyway paying 2.5 lakhs. Are you getting the context where everyone benefits because of a net of salvage? The salvage buyer is happy. He is going to take the vehicle at some optimum price that he feels is good. He will take it. He will sell it. He will, change the registration in his name and resell it. The insured is also happy because he has got 2.5, 5 lakhs, and he can go for a new vehicle sentimentally. The insurance company is also happy because if they settle it as a repair claim, the repair estimate is 3 lakhs. Instead, in this net of salvage, they are settling only 2.5 lakhs. It's a win-win for all the parties, net of salvage. This is done more on case-to-case basis, where these days, the recent new vehicles, so there are hard vehicles, branded vehicles, and they have the safety measures. You have the airbags, or you have, I don't know, there is air brake systems. So, it's always possible that even for a worst accident, you can expect 50 to 60% repair estimate. Now, in all 50 to 60 border cases, salvage fetching will be very, very high. And the second-hand market today in motor, the salvage buyers have made a big business model out of it. They buy such vehicles, they repair it, and they sell it at a premium price. They may sell it to a vendor, or a transporter, or to a taxi guy. That's a business. So because of the branded vehicles and the sturdy models, SUVs and all, they go like this. They don't simply repair and keep it. It goes on net of salvage. And the insured is happy. Once accident means it's in his mind, sentimentally, he wants to sell it off. So he will go for a net of salvage. But clearly get the difference between constructive total loss and salvage. They are not the same. Constructive total loss is 75% and above. 75% of the IDV से ज़्यादा होना है repair estimate. Only then it is constructive total loss. Or the repairs are highly uneconomical. It's too laborious. It's a long list of repairs. You don't want to do it. Uneconomical. Then also you do CTM. But net of salvages, even though it is not qualifying for a total loss, if there is a very good salvage that can be expected, then all parties like to go for net of salvage settlement. Partial loss is partial loss, right? Now, having seen the standard claims which are technically payable, we'll move to non-standard claims. Here's where the situation is such that either there is some deviation in breach of warranty or breach of condition, somewhere there is some lacuna. Non-compliance is there, right? So non-standard means, let's say, in the case of a driving license, it has lapsed, or in the case of change of address in the RC book, they have not informed. Some minor breach of warranty or condition is there. Not gross. It should not be big. Like, let's say, the driving license of the person, he is having a light motor vehicle endorsement in his driving license, which means he can only drive three-wheelers or taxis. But with that license, he is driving a lorry on the highway. That is invalid driving license. That will not constitute for a non-standard claim. There is no rule, hard and fast rule, but the insurance company cannot pay a non-payable claim under non-standard. It is just to adjust the client relationship, or a very minor breach in condition, minor non-compliance, in which case they will pay 75% of the claim. Generally, non-standard claims are settled for 75% of the actual claim payable for any minor non-compliances. The second one that is there in the slide. Now the first one is called cash loss under non-standard. This is also very famous, very commonly followed non-standard claim settlement. Cash loss means what? Again, the repairs are too many, uneconomical, long list, and the insured, the owner of the vehicle, decides that I don't want to do repairs of this vehicle. I want to put it in the garage right now. I am not going to be using this vehicle. He simply doesn't want to put the vehicle in the garage and repair it. There is a claim. He has lodged the claim, but he says, I don't want to repair it now. Like this, also, there are cases in the market. So then the insurance company will offer a cash loss settlement, which means the repair estimate will be drawn. In the same example that I used, let's say IDV is 5 lakhs, repair estimate is 3 lakhs, 60% of the IDV. Now, we are talking about cash loss. There is a brief non-compliance or whatever, but the insured says, I'm not going to be repairing the vehicle, or there is a brief non-compliance. Then the insurance company will say, okay, whether you repair it or don't repair it, it's fine. 3 lakhs is the repair estimate. I will deduct 20 or 25% towards this non-compliance, or towards the fact that you don't want to repair the vehicle right now. So 25% if I deduct from 3 lakhs, which is the repair estimate, it comes to how much? 2.25 lakhs. 75,000 rupees they will deduct and settle the claim, and they won't ask for any proof whether the vehicle is repaired or not. But the policy will be cancelled and the insured will be left to his own insurer at the end of the day. So non-standard claim is for minor breaches, where the assessed claim, whatever is assessed claim, 25% is deducted and claim is settled. I hope this. So this clearly, there's constructive total loss, there's actual total loss, there is salvage loss, there are partial loss claims. These are standard claims. When you talk about non-standard, a further 25% from the finally adjusted claim is deducted to penalize towards some non-compliance that has happened in the policy. Then another type of settlement is cashless, typically for partial loss claims. You know, right? Everything is cashless. The insurance company directly pays to the garage, right? So there is a process which we will look at. There are certain additional documents that are required. Cashless settlement is simply where the vehicle is put in the garage, the surveyor assesses the claim along with the workshop guy. Whatever parts are need to be payable under the policy, the dam repair is done, the final bills are generated, and whatever amount is payable by the insurance company under the policy, there will be an authorization letter that will be released by the insurance company, and whatever balance amount is payable, like consumables or depreciation amount or tires or old damages which are not considered by the surveyor, whatever is not non-payable amount, that will be borne by the insured. And finally, the vehicle will be delivered to the insured. So this is cashless settlement. Ex gratia. Ex gratia is not very common in motor, though, but it's a very important client, for the sake of client relationship. An absolutely not payable claim. Absolutely not payable claim. An insurance company can decide based on the top management of the insurance company. They take a call, commercial call or marketing call, to pay 20 to 30% as goodwill gesture. Ex gratia is just a goodwill gesture to keep the relationship going, or on some humanitarian grounds, or just because the claim is genuine and some genuine lapse happened, the top management will take an internal decision to pay a claim. but generally it is around 20 to 25% of the claim that has been made by the client. Now, having seen the types of settlement, role of the surveyor, and many other things, we will have to look at the role of an investigator. When is an investigator appointed? So, investigator is generally appointed wherever there are doubtful situations, wherever there is fraud expected, can be, breach of insurable interest, utmost good faith, or somebody who's deliberately caused the loss. Whenever there is any suspicion, apart from the surveyor, investigator also gets appointed. So investigation is in addition to the survey, an independent investigator will do the investigation. Especially for theft claims, definitely investigator will be appointed, right? Whenever there's a theft claim that is informed, investigator will go visit the house of the insured, talk to a few witnesses outside where the vehicle is generally parked, is it kept safely, little, whatever facts about the case he can gather, he will gather. Investigation is also definitely appointed when there is a third party involvement in the claim. Let's say there's a third party death involved or major injuries involved in a particular accident. FIR is issued, charge sheet is there against the driver who was driving the insured vehicle. Definitely, investigator will be appointed mostly by the insurance company to make certain inquiries with the witnesses around the accident spot, so that we get a broader idea about the claim. So, like I already said, the specialists or the kind of people who get employed or involved for assessing a claim. If it is a non-damage claim within India, it can be automobile engineers, like I said, for regular vehicles, mechanical engineers, whenever you have these, equipments, and civil engineers sometimes when you have construction equipments which are damaged, chemical engineers. CAs are also used to come into some check and balance, especially fixing IDVs, old and obsolete vehicles, whether the IDV is properly fixed. All these written down values account, the values as per the balance sheet. If there is any clarification needed, CAs are also contacted. And of course, there are general average that is specific to marine. Just ignore that. Now, outside the country, when you say they are called claim settling agents, they are not surveyors. This is not applicable for motor insurance, though. So we know what are the basic documents. We look at more specific documents. The basic documents for any claim form, which is, like I said, it is the onus of proof on behalf of the insured, because he is the claimant. He has to make a claim and he has to prove that he needs to be compensated. So from onus of proof point of view, claim form becomes a very, very important application form that is submitted by the insured. Then policy details, accident details, estimate of repairs, that is an important document. And depending on the class of insurance, various documents will apply. We will look at it. There's a survey report and also sometimes government authority reports, especially when you have a permit kind of situation, or like I said, the fire brigade report, or let's say there are traffic violations that have happened, then you need also the traffic police report. Like this, depending on the case, there will be reports needed from a few government authorities as well. So claim form, survey report, medical opinion, documents to be issued by the insured, and other evidences that need to be collected by the insurance company. Admission of liability, quantum, and it's agreed upon, and then a settlement happens. It's again just an initial summary. We look at each one. So once the documentation and quantification is initiated, let's say it reaches a point where the liability is established. That means what? Claim is payable as per the terms and conditions of the policy. But there's a dispute in the case of quantum. It quite happens in other claims. In motor, it is not so common because people want to just negotiate and close the deal and move with life, move on, because they want to use their vehicles. But even then, there can be dispute in the case of the claim amount, especially with fleet owners, or it's in a total loss situation. Uh, you know, you can expect a situation of arbitration. The important thing about arbitration is they are also third party licensed people like surveyors, but arbitrator gets involved and appointed by both the insured and the insurer together. They will nominate once the liability is established, but there is a dispute in the case of a quantum of claim. Very important aspect of arbitration. Then you appoint a nodal point, a midpoint, a mediator or a referee who's called an arbitrator. He will sit for the negotiation. He will ensure that the insured and insurance company come together, negotiate, and freeze the disputed quantum. There are certain policy conditions which are referring to the limitation aspect. Right? So after expiry of 12 months from the date of the loss, there can be no liability or no intimation that can be accepted. That means, let's say 31st December 2021 policy lapse, within 2022 they have to file the claim. If they wait for 12 months and then lodge a claim, that need not be considered by the insurance company. They can reject the claim. That's what the condition says. Right? So last requirement, information called for 12 months lapse. So one thing is intimation of the claim itself happens after 12 months. Another thing is there are a few documents or last requirement, the last one document is waiting to be submitted. If that takes beyond 1 year or 12 months from the date when it was asked for, let us say you had asked them for proof of the vehicle, maybe being in the city or anything, any document, uh, being in the office, or could be any material document, or let's say permit itself. So permit he has not submitted. So he has submitted a copy of the permit, or let's say the fitness certificate for the goods carry commercial vehicle. You have asked in April, but till next April also they didn't submit. Then they lose, the insurance company can reject claim. This is what limitation of 12 months means. So disclaim liability by insurer. Now again, the third point is when you have negotiated the claim, everything has happened, you're not satisfied with the insurance company's offer, you need to file a suit against the insurance company in an ombudsman or in a consumer forum if you're not satisfied with the amount as a client. But you should do that within 12 months. Beyond 12 months, again, no suit will be valid. So I wanted to remember three aspects of 12 months, which is called the limitation condition under the policy. Another condition is loss minimization. We already saw. It is the legal duty of the insured to minimize the loss. It is his duty to protect the property, to keep it under locked condition, to keep it in a shade, to keep it, not leave it, let it loose. Most of the times, these vehicles that are stored in open stockyard, fleets, this is one big problem that the insurance company will face. Most of the claims go into non-standard situation. If they don't take proper care, it may be a minor breach. It's not like it's a huge breach, but still they did not take due care of the vehicle. Then, like we already saw in the previous slide, the claim will naturally go into non-standard claim settlement. The insurance company will deduct a certain portion and pay the claim. So very important that the insured takes enough care and precaution for the vehicle. Primary duty of the surveyor is to advise and suggest measures. So surveyor's job also is to ensure that once the claim is reported and the vehicle has been submitted to the garage, then the surveyor also has to keep an eye to ensure that the loss does not get aggravated. That there is minimal claim that happens to the for settlement. Like I already said, once the insurance company has settled the claim, there are certain recoveries that they can have. Like I already said, in the case of theft, subrogation, it is quite possible after settling the claim, the vehicle can be traced by the police. So subrogation letter is important. It is quite possible that a vehicle was abandoned by a client and they took a total loss claim. Again, the ownership of such abandoned vehicles, the insurance company will take over. So that tomorrow, if there is any possible recovery, it should come to the insurance company. Similarly, salvage. Any salvage or remains of a damaged vehicle, it has to be monetized, and that has to come to the rescue of the insurance company. Whatever the salvage buyer gives as a quote or a value for the salvage, that will be deducted from the claim amount. That's clearly a recovery aspect for the claim. That's where insurance company ensures that the claims ratio is low, the claim amount is low. So these three aspects are very important from recovery point of view, where the insurance companies outgo, the claim amount that they settle will get minimized, and the claims ratio also will be more profitable. So just that we've seen a lot about own damage claims. I just have one slide on third party liability. If I go into third party claims, that will be another separate webinar. We're not looking at it, but still I wanted all of you to get some basic exposure to third party liability. So what do we cover in the case of compulsory third party liability? We know that motor vehicle insurance, third party insurance is compulsory, law of the land. As per the Motor Vehicles Act of 1988, it is compulsory to take motor vehicle third party insurance. No insurance company can deny a third party liability policy. They can be severely cautioned and fined by IRDA in case they deny to issue a third party liability policy, right? So what does this cover? Compulsory, any third party physical property damage, right? Let's say I am the vehicle owner, I have a motor vehicle insurance policy. I can cause third party property damage when I use my vehicle. I may hit a public pole, electricity pole. I may hit the compound wall of another person's building. I may hit another vehicle itself, right? I may hit the pavement of the road. It can be public property, it can be private property. Let's say I'm going as a visitor to a shopping mall. I may damage the shopping mall's building in some way because of rash driving. All these are third party property damage, right? So we know that property damage as per the policy is a compulsory cover, and generally it is inbuilt up to 7.5 lakhs cover. It is not an unlimited cover as per the policy. This is as per Motor Vehicles Act. But a lot of people nowadays, of course, there's no discount, so sabhi discount hi hai. But in those days, when we used to have a certain process to give discount in motor vehicle policy, there used to be a discount that we used to give if somebody wants to reduce their property damage, third party property damage from 7.5 lakhs to 7,500. I think 6,000, sorry. So for reduced TPPD, third party property damage, TPPD, you get a discount in the premium. Nowadays, everything is discount, everything is covered. There's no logic for giving discount. That's something else. But I wanted to understand that third party property damage is a limited cover. It is not unlimited. It has a limit up to which the policy will pay. Beyond that, if somebody is filing a case against you, the insured has to pay. The policy will pay only 7.5 lakhs, right? Now, similarly, third party death, third party disablement or injury, this is unlimited. This does not have a limit under the policy. It's going to come. That's what the new, transport ministry is saying, that every motor policy will see third party limits. Right now, death and injury does not have any limit in the policy. Whatever the court orders as compensation, the insurance company has to pay. The vehicle owner has to pay. But right now, I think in insurance policy, the Motor Vehicles Act is being amended. At least the proposal is there to put a certain limit on death and disablement also, just like how we have for property damage. It is yet to come. Then comes liability to public. So when you say public means passengers. Typically, in a commercial vehicle policy, you know that there are passengers who are carried for hire or reward. In a taxi, they pay taxi fare. In a bus, they pay bus fare, ticket fare, right? In a, let's say, there somebody has hired a tempo traveler to travel from Hyderabad to Vijayawada. It is travel by hire or reward. So these are all passengers, public, who are traveling in the vehicle by paying some fare. So for them also liability will fall under the third party liability. But if let's say you have a private car and there are people who are traveling in that car as passengers, they are called occupants, not passengers. In a private car, which is not used for commercial hire or reward purpose, the people who are traveling are called occupants. But where the people are traveling for hire or reward, they are called passengers. So only when it comes to public and passengers who are traveling for hire or reward, the third party liability section will cover them for compensation. Now, in the case of liability to workmen, what does that mean? You may have a driver, you may have a conductor in a bus, you may have a cleaner who generally, if you have a bus that travels to outstation, let's say from Hyderabad to Vijayawada itself, you will have, there will be 53 passengers or 55 passengers plus 1 plus 2. Plus 1 is driver, plus 2 is one conductor, one cleaner, right? So these are all workmen who are the employees of the owner of the vehicle, the driver, the cleaner, the workman. They all need to be compensated as per the Workmen Compensation Act. If in case something happens to them during the travel, injury or death, whatever happens to them, that will be covered under Workmen's Compensation Act. So that also is covered under the compulsory third party liability section, section 2 of the policy. So this much understanding I want you to know when it comes to claims. Now, whenever you say third party claims, the claim has to come through the court. It is not like directly you go and ask the insurance company, they will pay you. No. All third party claims, the end claimant, whoever is sustained the injuries or has died or their property is damaged, like I said, they are the claimants. The burden of proof is on them to make the claim and prove that they need to be compensated. So they will file a suit in the court of law, and the notice of that case is sent to the insured as well as to the insurance company. Then the entire court proceedings will happen. And this court, especially for motor vehicles, is called the Motor Accident Claims Tribunal, MACT, Motor Accident Claims Tribunal. So right now, I think we've majorly covered many aspects. We have another half an hour. I will just handle some of the claims handling procedures in practice, what happens in an office. So once there is a claim advice that comes, which is generally through an email or a telephone call, or nowadays it comes even through the call center, right? In those days, we used to get telegrams. In those days, when mobile started, I remember I used to have a Motorola phone when I was initially in the private company. When I just come, I used to get an SMS at odd hours. There is a claim for our, whatever mini truck or something. And then, so much tension if the SMS comes. So SMS or email or letter or, uh, you know, uh, any kind of advice intimation that comes, first thing is we record the inward stamp. Because when you see a claim form or even the statistics or records that are maintained, one thing is date of loss, another thing is date of intimation. Date of intimation of a motor claim is very, 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 very important. So that's why the moment you get an intimation, it is stamped. What do you mean by stamp? If it is a letter, you will stamp it. Otherwise, also, time of reporting has to be recorded in the records of the insurance company. You enter it in the computer system these days. Today, so nowadays, mobile app. Tuck, 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 everything on mobile. Now I'm sure at least I'm seeing 28 of you. I don't know. I'm sure all 28 of you are seeing this session on the mobile and not on the laptop. So you have mobile app, so you know how to record all these information. Now check the insurance cover that I already told you. The moment the advice comes, there is a motor claim officer who will check the insurance cover, right? Whether the policy is in place, the certificate or cover note, and the date is within the period of insurance, and then the claim is registered. So what do you mean by register is in the software, the backend software, the claim is registered with all these initial particulars against the particular policy. Now, like I said, what all are being recorded in the computer in the software? Date and time of accident, circumstance of accident. So whatever is written in the claim intimation, or let's say the intimation went to the call center. Nowadays, the call center is given access to your computer screen, so they will immediately type this accident. This is the narration given by the client. So even to the call center, the insured has to explain how the accident happened. I was taking a U-turn at Banjara Hills and the right side of my vehicle hit against a road divider. Like this, they have to give brief description of the accident. That will be recorded. Circumstance of accident. Then information of policyholder. All these will be recorded on the claim screen. Information of vehicle, driver. It's not necessary that the insured himself is driving all the time, right? So who was the driver and what time was the accident that happened? What is the use of the vehicle at the time of accident? Right? That means, okay, if it's a private car also, they will ask, where were you going? You were going to the supermarket or to the school to drop the children. Whatever was the situation, it gets recorded, right? Then if it's a commercial vehicle, whether you're carrying goods or passengers, these all become immediate information that get recorded in the mobile app or on the computer screen. Most important, the call center or the claims officer will ask, is there any third party involved? Is there any third party property damage that happened or any person who got injured? That also gets recorded. Then anything related to reinsurance also. Sometimes whenever there is these Chennai floods or Mumbai floods, it is a catastrophe. Now loads, lakhs and lakhs of claims get reported. So that time what happens, in the computer screen, there is a certain code that it will ask. At the back end, the insurance company has created a catastrophe code. Why? Because they want to know through that code all the claims that got reported because of the Chennai flood, because of the Mumbai flood. Let's say one event, one catastrophe. They want to collect information around that. So reinsurance related is always around catastrophe clauses. Why? Because once there is a catastrophe, there will be always a reinsurance recovery. So they will be having some reinsurance arrangement for catastrophic losses. So they will create a code and that is also inputted. Then important is reserve. So the moment a preliminary survey report is given, once a surveyor reaches the workshop, he looks at the estimate of repairs, he picks out what all are covered, he has to give a reserve, which is the outstanding intimation amount. So without a reserve, a claim cannot be registered in the software, right? So the immediately survey, generally these days they are putting it in the software itself because they also have access on their mobile app. So they will put the reserve, let's say 1 lakh, then little higher only, but they will put it. Generally, whatever is repair estimate, they will put it as the reserve. Liability reserve also. See, today you don't know. The moment there is a third party involved, you don't know what will be the loss. But generally, you can make out. If it's a death claim, then generally they will put 2 lakhs, 3 lakhs. If it is property damage, they may put 30,000, 20,000. Injury, they may put 50,000. They have some norms, but for the liability also, the moment we know there is a third party involved, we put some amount as reserve. And of course, the name of the surveyor is also included and saved. Now I'll skip this. This is the same thing, insurable interest and utmost good faith that we already saw. I'll skip this. Indemnity also, we already saw. Contribution, subrogation, proximate cause, all these things are established. And we also saw the types of losses, right? All these total loss, constructive total loss, theft. Now, independent theft of accessories, I would like to explain a little here. So, quite possible that the vehicle did not get stolen. I wanted to understand in the motor insurance coverages session, we saw that one of the exclusions under the motor vehicle policy is theft of accessories is not covered. And let's say there's a tape recorder, right? Let's say, these funny accessories that they put, right? The reverse camera, or you have the fan, or something people put these days, decorative things. All these accessories, if it is stolen, it is not covered. It's a clear exclusion under the policy, unless the vehicle is also stolen at the same time. Along with the vehicle, if it is stolen, it is covered. But just the accessories means it is excluded because the client is expected to take care. So independent theft of accessories, if it is there, we like to record it because that has to be excluded from the claim. We don't cover it. This is again same settlement types. Now this is again documents like we saw, some detailed documents we will see, vehicle details, use of vehicle, driver details, right? All this is again mostly summarizing whatever we have discussed. Now these are the second set of documents that I wanted to in detail explain. Apart from the claim form, which is the primary document, we have the policy copy that we ask, registration certificate must, permit in the case of commercial vehicles, permit for route. See, like right, most of these passenger buses which go out station, they are not supposed to enter city limits before 8 p.m. during the day. And routes also, a Tamil Nadu vehicle should not enter the territory of the adjacent state. There is a permit. Like this, the permit copy is important to ensure there is no violation. Then endorsement for hazardous goods. So if at all any vehicle is used for hire or reward, goods vehicle, if they want to carry hazardous goods, typically take the example of tanker. A petrol tanker, you should have that particular endorsement in the RC book. Endorsement for hazardous goods has to be endorsed. If it is not there and they are carrying petrol at the time of accident, claim can be denied by the insurance company. Any number of claims have been denied like this by the insurance company. Now, PLI is not relevant here. Load challan. So, like every commercial vehicle, goods carrying vehicle, we charge the premium. We do the underwriting based on the gross vehicle weight of the vehicle. So, one thing is how much goods it can carry, and including the weight of the vehicle also. GVW. These weigh bridges, right? There will be so many weigh bridges across the highway. So, whenever any vehicle loads goods on the way for hire or reward, they go to the weigh bridge and check how much is the GVW. What is the total weight of the vehicle including the goods? They should never cross the GVW that is mentioned in the RC. If there is a breach of GVW, that's what load challan means. That weigh bridge challan will show how much goods were stored in the vehicle at the time of accident. If it is more than the GVW, then it can either be settled as non-standard claim or the claim can just be rejected by the insurance company. Another important is trip sheet. So trip sheet is like, again, in the case of outstation buses, let's say, they are not allowed to have more than number of trips, say up, down, let's say, going up and coming down. There are a number of trips that are regulated to maintain the speed check, to maintain territory intrusions. So the trip sheet is something that the vehicle has to maintain and show to the surveyor. Very important document. So these are all technical aspects. Then valid driving license. Like I said, If they are driving heavy good vehicles, then they should have the necessary endorsements in their driving license. They should be a major. Like most of the times, if they have a learner's license, then you know the rule. If you have only a LL, learner license, LLR, then a person who has a permanent driving license has to sit next to you. Only then you're allowed to drive. Like this, valid driving license is an important process that is a check. Then, of course, the claim form, estimate, and the survey report. All these documents become very, very important for a motor claim. This again a summary, then the claim gets registered, claim form, estimate of repairs, then preliminary report, then you get photos. Very important aspect are photos which show proof for the nature of damages. So one thing is the surveyor also cannot simply, create any fraud claims. If it is old damage or accumulated damage, sometimes the surveyor also tries to help the client. He will still allow the claim, though, so the claims manager who's sitting in the office, he will verify the photos. If you look at the damage, you will know, depending on the amount of paint or the amount of rust that is it has gathered, whether it is fresh damage or old damage. It's very easy for a technical guy to notice and get to know whether these are fresh damages. The dispute comes in cases like this. Especially the dispute comes between the surveyor and insurer, between the surveyor and the workshop, between the surveyor and the insured, or insured and the insurer. They may disagree upon these aspects of old damages, right? And a breach of conditions, breach of warranties. All these are pain points. So photos are very, very important evidence. We already saw surveyor appointment. These are more summarizing about what all we saw right now. Depending on the nature of claim, the category of surveyor is appointed, the extent of loss, the competence that is needed to handle the claim. Accordingly, survey will be appointed. So for minor losses, like we saw small losses, generally the insurance company appoints their own in-house surveyor, who are generally automobile engineers appointed by the company as employees. Again, repeat, repair costs, replacement costs, depreciation has to be deducted, excess has to be deducted, salvage is something, those wreck, the remaining parts which are damaged and sold and replaced, they have to be evaluated, how much it will fetch in the market, that metal part or the fiber part, something 1,000 rupees, 500 rupees, whatever, that amount has to be arrived, and then determine the way it is to be disposed, right? And then it can be either a direct payment to the client or it can also be a cashless settlement. So just to go through the claim form, what are the important components of a claim form? Of course, the insured particulars, then you have details of the vehicle, hypothecation, very important. This is what I said, to establish insurable interest, whether the claim has to be paid to the client or to the financier. The financier will be very much recorded on the RC book also. Then driver details, place and time of accident, reporting to some of the public authorities if needed, and passengers and goods, what was carried during the accident, and always witnesses. In the claim form, there will always be one or two witnesses that need to be submitted by the insured. Like I said, the claim form is the basis for the doctrine of the principle of onus of proof. Again, this is, I want to skip this. Only one thing, the last point you can see in the claim form, sometimes even the sketch and accident and a few photos that the insured has taken, that also will be asked. If they have, definitely they will take these days in mobile. So they have to submit their photos also, just to correlate and ensure that there is enough evidence to prove the extent of damage. So survey report, we know how important a document it is. It confirms the validity of the documents. It confirms the accident, photos. It gives the estimation and calculation of claim. What are the labor costs? What are the parts to be replaced? What is the depreciation? How much excess? How much salvage? Complaints with policy conditions also has to be given in the survey report. So some of the additional documents than the previous slides that we saw, RCDL permit we already saw. In the case of commercial vehicle, fitness certificate also important because the older the vehicle, it should be roadworthy, right? The fitness certificate is something that has to be renewed by the vehicle owner to prove that it is worthy, it is in a proper condition to ply on public roads, right? So valid fitness certificate is very, very important, especially for school buses. This is something that, I mean, in my experience of handling motor claims, the fitness certificate is always a challenge when it comes to school bus. They never have fitness certificates, but the vehicle will be in good condition. This is another big trauma. They don't take that additional step to go and renew the fitness certificate, right? But as a document on paper, we definitely need a valid fitness certificate. Final bills and satisfaction note. It's a very important document which I would like to explain here. So final bills is something that all the repairs after finishing getting completed. Estimate of repair is the initial estimate. Final repair bill after completion of repair, whatever has been repaired, for that the bill is given by the authorized garage. Now, based on the claim settlement or approval that is given by the surveyor, there is a satisfaction note that will be sent to the insured. They have to sign and give this. What does it say? It will say that towards this claim, I am fully satisfied with the repairs that have been done to my vehicle, and I discharge the mm, uh, I duly discharge the settlement of the claim, full and final settlement of my claim. They have to give. It's like a discharge voucher, but because it's in all cashless claims, it is not called discharge voucher, it is also called satisfaction note. So just not just discharge, not just full and final settlement of the claim, but it's also that I'm satisfied with the kind of repairs that have been done. So that, because it is cashless, they don't go back and say, no, I'm not satisfied with this repair. It's completely to close the claim. So the name is called satisfaction note when you talk about a cashless claim. And of course, the bill is different from the receipt. Bill means this much has to be paid. Receipt means after the insured pays that amount, whatever difference amount that he pays, they will get a receipt from the repairer. Right. So a few conditions at the time of claims is improvements. So again, principle of indemnity. Sometimes, one part of the vehicle is only damaged. So as far as the claim is concerned, painting for that part only we will give. But quite possible, most of the times we realize once the vehicle goes to the garage, then the insured takes a lot of decisions. He will say, okay, that one patch will look bad, let me go for full painting. So all these improvements, full painting of the vehicle and defects not connected to the accidents, maybe there are some mechanical failures also. Power steering is not working, right? Power windows are not working. There is some jam or some tape recorder issue. All those also get fixed. So these improvements are all very important for the surveyor to disallow from the claim. This is again a repeat. I'm sure you have some idea about all the types of class settlements that we saw in detail, right? I hope everything is a little more familiar to all of you. So another important aspect about communicating to the insurance company. So generally this is a policy condition. Any communication should be written. any written communication shall contain without prejudice to liability. So one thing is, whatever the insurance company sends out, they have to send written communication, right? It's very important because for the sake of record. And whenever they send any, you must have seen, as I don't know how many of you are from brokers, some of you must have seen that any communication that comes from the claims department, it will be written without prejudice to liability. So one thing is all communication, formal communication about a claim will be written and sent either through mail or through letter or fax by the insurance company. And one statement will be there which says without prejudice to liability. What does that mean? Just by sending this liability, it does not mean I am liable to pay to you. As an insurance company, I am writing some letter to you. That doesn't mean I am liable to pay. That's a separate process. Whatever is needed has to happen. So they will put one disclaimer without prejudice to liability. So very important aspect in claim communication. So just to conclude on a few aspects of these additional procedures, when you talk about a total loss or constructive total loss claim, which means total loss, constructive total loss means 75% and above of IDV. It is considered as total loss only, right? You need RC, you need the tax book, right? Whatever taxations they have paid. Ignition keys have to be surrendered. It's no more their vehicle. It's a total loss. They cannot reuse the vehicle. So the keys have to be surrendered. And blank transfer forms, which means the RC has to be, there is no RC. See, as it is, if it is a TL, the vehicle is collapsed, but still cancellation of RC has to be done. So there is a process, back-end process that the insurance company will follow. They will take transfer forms signed by the insured and they will inform the RTA that this particular vehicle has been settled on total loss basis. So this vehicle does not exist. By registered post, we have to send. I'm telling the back-end process. And the scrap, like, the scrap of the vehicles as beyond repairs. RC and keys also should be surrendered to the insurance company and in turn to the RTA. This is the conclusive back-end process when it comes to total loss or constructive total loss. So when it comes to theft, like we already saw, there is an FIR and there are certain regulatory bodies who have to be informed about the theft, which is a regular process to RTA. Whenever a claim is settled on theft basis, the police report and RTA have to be informed. Station directory has to be, as a crime register, it has to be registered, which is beyond FIR. This is all the job of a motor claims officer who deals with theft claims. And non-traceable certificate, like I said, generally 60 days or 90 days. The police will try to get, if they don't track the vehicle, then they will issue the certificate. Duplicate RC, duplicate RC, because the RC could have gone along with the vehicle itself because it got stolen. But generally, people will have two RC copies. So duplicate RC, taxation certificates. If the originals are stolen, they have to give duplicates, and non-user form is to be issued by the insured. So that means they won't use a vehicle later if it is traced. That also has to be signed, and then an independent investigation report is always engaged in the case of theft. And like I said, subrogation, which means the transfer of ownership of the vehicle from the insured to the insurance company. That means later, when the vehicle is by chance traced by the police, then it becomes the property of the insurance company. Right? So spot survey, immediately receipt of, okay, this is for recovery of stolen vehicles. So this is cash loss settlement, like we already saw. So settlement of total loss claims without repair bills. So somebody feels there is a slight breach in the condition, or they don't want to go for repairs, they are not willing to put the vehicle for repairs, then settle, we take salvage into account, and we reduce 25 to 30% of the assessed amount and settle it on a non-standard basis. It is more like a compromise settlement, non-standard basis. So right now, this concludes the session on motor insurance claims. I hope it was useful, the way we structured the program and the way we put the content together. I hope you got some insights into the session, and it's important that if you get a chance in your work, if you want to internalize the learnings from this webinar, you should visit one workshop whenever there's a claim. I'm sure all of you, some of you working for a broker or insurance company, some of you are going to work with an insurance company, those of you who got placed recently. So it's important if you want to internalize all that I'm saying. See, for me, I've been in the motor claims department for 3 years. So it just comes because I've practically handled them. So don't worry much if you don't remember all that I've told you, but definitely practical exposure will help you, imbibe what I told you much deeper. If you get a chance to visit a garage along with a surveyor or with a claims officer during a survey, then you will see how you can relate to all that I've told to you. You should go for a total loss claim survey. You should also attend a partial loss survey. Then a lot of whatever documents I've spoken about will make a lot of sense to you. So right now, I think we will close the session here. Thank you so much for being a patient learning group. Many of you are repeaters. So happy to see you. Come back again. And if you found this program useful, the only thing our request is, we are trying to make this happen on an online platform and in a very easy method, right? So somebody is asking for the PowerPoint. See, we don't give PowerPoint presentations because that's not the idea. So whatever I put in the PowerPoint presentation, you do a Google, you'll get it. That's not the point. This is a webinar. This is an interactive mode. If you want me to stay back for a few more minutes, you have some questions, you can ask me. But even though I give a presentation, see, the experience is nobody looks at it. The idea of webinar itself is to give you that access to subject experts. So from a webinar point of view, we don't share the PPTs. But nevertheless, I'm sure you've taken notes and you've taken some snapshots which you can make use of. But I would also encourage you to keep coming back. It's okay. You need to invest some time and resource on training. And like I said, keep exploring on Google. There's no end. Content is all. Whatever I told is available on Google. That's not a big thing. But I would encourage you to go and visit a survey. That is the best way of further learning. So if you found this program useful, and one more thing, for some of you, many of you are asking for the content. See, this is a walk-in webinar, right? This is more like an opening. In case you want to do a detailed course where, it's a certification program, there we do give a handbook and we do assessments also, an online assessment. That is a detailed course, 6-hour course. It's a repeat of what we did today, but in much more detail. We start from coverages, the policies, the endorsements, everything. So right now, I think this month we had, it may happen next month. If you attend the 6 hours course, then we give you a handbook, we give you an online test, and we also give you a certificate of completion. But for the walk-in webinars, it's more like a discussion. I'm sure you've still learned a lot and you can put them to practice. And if you found it useful, please spread the word to the people who may make use of it. That is our kind request to all of you. So thank you so much for joining. We'll stay in touch. Do stay connected with us. Look at our program that keeps coming up and make use of them, and spread the word to your friends. who may find it useful as well.